Today's webinar will be chaired by Mark Richards, Partner, Projects and Infrastructure Finance at Berwin Leyden Partner. Mark has extensive experience in the PPP sector and has been involved in some of the most high-profile PPP and infrastructure deals, including advising on equity, debt structures, infrastructure fund trades, leasing, structured finance, and concession-based structures. Mark, over to you now to introduce our panel and kick off the webinar. Thank you.
Yeah, thank you very much again for hosting the webinar. We've got a great panel today, which are here to discuss the UK Priority Schools Building Programme, and I know that we're all very excited to be discussing the possible funding solutions coming out of the programme. So let's introduce the panellists. Today we have Dominic Nathan, MD of Infrastructure, MD Infrastructure and Finance for Shore Ganzi.
Hello, Mark.
Nick Pryor is Head of Infrastructure and Capital Projects at Deloitte.
Good afternoon.
Chris Heathcote is MD and Global Head of Project Finance Debt at Lloyds Banking Group. Okay. Kirk Taylor joins us as the Development Director of Bilfinger Berger Project Investments.
Hello. And
finally, Laura Porter is a Business Development Director in the education sector at Balfour Beatty.
Hello.
Hi. Well, we're here today to talk about the UK Priority Schools Building Programme, and clearly over the past few years the social infrastructure sector has probably been the one that's probably been most affected by the sort of freeze on capital spending within government. And if we just take a step back to see where we are and to go back from where we've been, 2003 we had BSF, and BSF has delivered 310 schools by last year 2011, and there's another 694 in the pipeline up to 2015. The reason we're here to talk about Priority Schools Building Programme is really centred around the James Report, which was a very interesting report on BSF and capital funding generally in the education sector, and it made some quite interesting and almost, dare I say, damning remarks on what had happened in the past, and some really constructive ideas of what's going to happen in the future. And I was taken by the comment, calling the BSF programme the quixotic aim of rebuilding and refurbishing every secondary school in England by 2020. A laudable aim, no doubt, but a very, very challenging one. One of the first acts of the coalition government, May 2011, Michael Gove, was to effectively scrap BSF and implement a number, if not all, of the James Report recommendations, and announce the Priority Schools Building Programme. Centre fast forward to May 2012, where we get an announcement of the first schools to be part of that Priority Schools Building Programme in May 2012. We're now at coming up to October 2012, and we haven't seen any schools delivered under the Priority Schools Building Programme. So really the aim of this webinar and this discussion with our panellists today is really to discuss where are we and where are we going forward. So if I start with my first sort of big topic, which is the programme itself, it was launched in 2011. If I turn to you first, Laura, as one of the developers on the panel, it's very different to what was done under the BSF scheme, but we still haven't seen any of these schools tendered. What's happening? Where are we now? And what's your thoughts on the programme so far?
Yeah, I mean, I think it's worth just starting off with kind of an overview of where we are. We do know that there are going to be 261 schools already identified as receiving investment over the next 5 years. I also think it's really important to focus on the fact that those have been identified on their need rather than on transformational objectives, and therefore we really are going to be looking at the worst of the schools in terms of the capital investment that they've had over the last few years. I think it's also worth saying that because of the delays that we have seen, that the EFA have focused on improving the programme and also identifying some quick wins that they can do with the 42 of the worst schools that they've looked at, and those are going to be delivered faster than perhaps the PFIs that we're going to see. So we are expecting those to be released within the next month or so, and then that will be followed by 219 PFI schools. I think what I'm really encouraged by is the fact that we are seeing this done through a centralised procurement model. I think that will result in some significant benefits for all of us in terms of contractors, but also for the schools involved, because they won't have to spend as much time as they did during BSF within design development and also commercial negotiations. And I think we all need to be encouraged by the fact that those schools will be, and school staff will be doing what they are best at, which is teaching and focused on that rather than coming into design team meetings. I think the other key things that we're seeing is that we have been given kind of the budgets that they're looking at for these schools, and they are vastly reduced from the BSF days. We're probably looking at £14,000 per metre squared for a secondary school. I think looking at the BSF programme, we're all aware of schools that were up at the £2,000 per metre squared plus even up to £4,000 per metre squared. And you've got to look at the investment potential, and actually we can deliver more improvement across more schools by delivering things at that level. We're also really encouraged by the fact that we're looking at standardised design solutions, and also the fact that we're separating out the PFI from the D&D schools, which I think was always quite a frustration within BSF, particularly for investors.
That's great. So very positive, Laura. Kirk, as the other investor on the panel and developer on the panel, is it all positive from you? What's your view of the way the programme's shaping up?
I think it is. I mean, I think I echo pretty much everything Laura says. In terms of, is it very different from what was done under BSF? You know, I think yes, it is in a number of areas. On the other hand, I think, you know, if we look back at our sort of traditional batched PFI schools, late 90s, early 2000s, you know, I think actually in terms of design consideration and spatial standards, you know, I think we're probably harking back to then. So I think, you know, I'm quite positive. I think the industry, you know, has demonstrated that it can deliver schools in a range of price brackets and approaches. You know, and I think the skills that the industry bring, you know, I think you know, it does mean that we're very well placed to meet the challenge the government gives us. I think you know, it'll just be important that we do learn the lessons of school delivery over the last 10 to 15 years. You know, and just ensure that what has worked and benefited education, we try and keep within tighter cost budgets and tighter spatial standards. But no, generally I think I echo Laura's positiveness.
We're in a bit of a lull at the moment. Hopefully the lull before the storm, as we get lots of OG notices with schools programs and lots of work for the industry. But in this period of preparation almost, is there anything that from a contractor investor perspective that EFA could be doing for you now that would help as this, hopefully, this wave of projects come forward? I'll direct this to Laura to start with. I'll ask you next. Okay.
I think there are a number of things that the EFA are focused on doing. We're just hoping that they happen quickly. One of those is releasing the baseline design information that they've been working on over the summer that really gives us an insight into the technical solutions that they're looking for. And that means that all the contractors who have been developing their own standardised solution for schools can really look at that baseline design information and make sure that their standardised solution works with some of the key parameters. I think it's also really important that we start to see some of the contractual documentation. We know there are going to be some changes to the risk transfer position, and the fact that ICT is coming out, soft FM is coming out. The sooner we see the documentation, the better, because I think we can all get ourselves comfortable with the changes in the positions, and that will help the procurement process be as quick as it is planned to be. So they're the key things, I think.
Kirk, anything to add on that?
Not really. I think they're pretty much in line with that. I mean, I think I've been encouraged by the way EFA have responded. You know, they have run industry-wide meetings. They've been very proactive in terms of one-on-ones, and I know they're meeting investors to talk about the financial markets and the funding markets. So you know, I think they are taking a proactive approach, and I just echo what Laura says around you know, let's get some of the, while we have got this quiet moment, let's get some of the legals out, let's get some of the design baseline information out, and hopefully then we can have some early dialogue around that in terms of, you know, where we've learned lessons, perhaps how we can feed back into that before we get into full bid mode.
Thanks, Kirk. And turning to you, Nick, we've heard from Laura there are going to be two different procurement models sitting side by side in the programme, the capital funded batches and the PFI batches. Any thoughts on how they're going to interact, and if you were advising government, how would you see those working together?
Well, I think the message comes back from the conversation already is that after the James Review is keep it simple and make it as standard as you possibly can, and then we're going to make some good progress. Just one final point before on the procurement process, before I come on to the question you asked about the two models. The big thing that I also think that is out there is the fact that with the abolition, if that's the right word, of PFS, there's a lot of expertise that was lost, whilst at the same time the James Review was pushing for a centralised model. Now, what was left of PFS has been absorbed into the department, but there has been a lot of people who have moved on from that. And I have to say, it's critical that the department, if it's centralising its structure and creating that simplified, standardised framework, it needs to have the expertise within the department to deliver. And if it has got the size of the programme that it is aspiring to, it's a new model, then it needs to be able to manage it. And I have to say, it worries me to have seen so many good people move out of that space. Addressing directly the question you asked, you talked about the sort of more traditionally type funded and the PFI. I mean, keep it simple, keep them separate, procure them in the way that they are defined, and then get on with it. I think it should be really fairly straightforward, and I think that seems to be, from what messages we are hearing out, is that is what is planned, certainly for the first batches. And then it's got a very good chance of moving forward quite quickly, as long as it's being procured by a sophisticated, properly resourced body.
Yeah, here, and I think that that's a comment that a number of my clients and contacts have been saying, that, you know, the industry moves on. People have other markets to go to. There are international markets with and competing calls on capital, and if education programs in the UK are not moving forward, then they can go and do something else. So it's so yeah, let's hope they're appropriately resourced. And let's turn to Nick. You've already mentioned it. I mentioned that in the introduction, the James Review itself. It's quite, you know, I use the word, and I'll use it again carefully, but it was quite damning on the former BSF program, and it had some very, very practical and sensible solutions moving forward. Where do you see the sort of handprints of the James Review on the priority schools building program, and what are the major positives you see coming out of the James Review?
Well, I think the centralised procurement, get that right, is a major positive, because then you've got a real body of expertise delivering this. I think the simplification of the projects, you're not trying to keep a whole load of stuff in there that isn't necessary to keep in there, so it makes it very clear both for contractors and lenders as well, to the subject of the funding model, as to what it is about, so it's a lot clearer. There was a focus on value for money. I think it's always very, as I'm sure the Treasury are currently struggling with, struggling is probably unfair actually, as they are dealing with the new PFI model, to create a better value for money and more affordable solution. It's all very easy in theory. In practice, in a more difficult environment, particularly with respect to the financing markets, I think that could be a struggle. But you know, there's some very good stuff there. I think actually we're going to be helping the budgets that have been set out, which we're always talking about. I think the world seems to have moved on in terms of what expectations there are in terms of what is appropriate for a new secondary school to be delivering. And I certainly get that sense from the industry. I'm not sure in terms of the front line from the head teachers, etc., where that message has absolutely got through. I suspect it's going to have to get through. But I'm sure Laura can talk more about that. But I'm sure we're going to be seeing more modular type designs, and I'm sure that James Review did conclude that there was it was overspecified, I think is one polite way of putting it, and I'm sure that there just isn't the budget to do that anymore.
And I think that's quite an interesting point, because we hear governments are very keen on localism and providing opportunities for local governments and local stakeholders to have a say in their local surroundings, and then we're moving to more centralised and standardised procurement. Laura, addressed it to you, and then I'll ask Kirk as well. You probably spend a lot of time talking to end users about schools, and it's probably the biggest project they do. One of the most important jobs they do is to procure a school for their area. How are you getting a sense of how they're feeling about the idea of a kind of top-down, centralised, it's a Stalin-esque, but you will have school design number 64321, or are they welcoming the fact that it's simple and they just want a school?
I think it's a really interesting point, and from the feedback that we've had from schools, the initial response is one of concern, and it is one of worry that they're going to have exactly the same school as next door school have, and that does worry them. However, once they get into the detail of it and we start talking to them about how a standardised solution, yes, it's standardised in terms of the components, but it can be flexed to meet their needs and to meet the school ethos. And I think I was at a conference yesterday where there were lots of head teachers and deputy heads who were worried about the process and wanted to understand more, but when we talked them through the process that they're going to go through, they actually got a degree of comfort from that they still could have a school that really reflects their ethos. And I think what we talked about yesterday, and I think is very important, is the time taken on the school's brief, and that's where the localism comes in. They can take time to develop a brief that really reflects what they want out of this new building. And from the BSF days, I have to say, where schools did this well, that document was worth more than 6 or 7 engagement sessions, because if it was clear and if it really did reflect what they wanted and it didn't change, then that made for a much smoother procurement process than those where we were in meetings week after week with different members of school staff understanding what they wanted. So I think I'm feeling positive that we still can develop schools that really do reflect the ethos and are also owned locally then and welcomed by not only the school but also the local community.
And Kirk, are you getting a sense of that delicate balance being in favour of the schools and the local needs through discussions you're having in the market?
I think so. I mean, it's interesting because we're doing a lot of post-occupancy work to try and get the good things from what's been done in the past and learn the lessons where they perhaps haven't been. And I think the general view we've got across the estate is actually most people would just respond positively to the fact that actually they're going to get a new purpose-designed school. A lot of these teachers are operating in very poor quality schools that really don't meet sort of modern environmental standards. They tend to be rabbit warrens of schools. They have areas where where kids can't be properly supervised and have safety issues and all of these things. So generally we've sort of seen a couple of camps. Schools, where local authorities have been fairly centralised in terms of determining what the schools, how they were designed. Most of the teachers and the head teachers actually have just welcomed the fact that they have had new purpose-designed schools, so that hasn't been an issue. Interestingly, where we've had head teachers who've been much more involved in the design, perhaps looking at cutting edge of sort of education transformation and new thinking, and as those head teachers have moved on, the sort of the new administration in the school, may be embracing different approaches. And so actually, what we have found in some areas is where we've delivered highly flexible schools, that space isn't always being used as was originally anticipated. So I think I'm not, from talking to the people we talk to in the market, I think I'm just picking up more of a general acceptance that actually a new school will give them the environment that they can, and that ultimately it's still about good teaching, and as long as we can give them schools that enables the teachers to perform to their best, an FF&E that matches that and everything, I'm not picking up any real sort of concern about the fact that it's centrally procured.
Okay, well thanks for that, Kurt. Just a last question directed at the the developer bidder sort of community in this panel, the sort of multi-million-dollar question, bid costs. Do you feel you have, collectively these organisations have a bit more confidence that you're not going to win them all, but frankly actually the bid costs are going to be much reduced in comparison to BSF? I mean, it's really we don't know, but is there any thoughts on that?
Absolutely, we think that bid costs are going to be significantly lower than they were during the BSF days, and that's something that obviously we welcome. I think that being said, we need to make sure that that is delivered, and that's through really making sure that the centralised procurement works as it should do, and that the timescales are achieved. I think one of the concerns that people are having, and this again came up at the conference yesterday, was that bid costs up to preferred bidder will be significantly reduced, and that's obviously positive. But then what we are going to have to do is we're going to have to develop a significant number of schemes within a short time period and achieve planning permission on those before we can achieve financial close. And I think the money that will be spent then is going to be much higher than we used to for a preferred bidder stage, and it's something that we're going to have to look to manage, particularly where planning is delayed on one or more schemes as it can be. And I think we really will need to look at the contractual structure and look at how variations could be allowed to bring other schemes in later.
Kirk, any thoughts on bid costs?
Yeah, no, I mean, I totally echo what Laura says. I think as an industry, if we're not keeping the cost of preferred bidder down to below BSF levels, and I think we failed collectively, but I'm sure we won't. And I agree with Laura's point from preferred bidder onwards. I think as an investor taking bid cost risk, and I'm sure most people would echo this. What we do want is the confidence that in a batch program, that pretty much the whole number within the batch will get to financial close at some stage, and that we're not appointed preferred bidder, and then for some reason the full batch doesn't materialise.
Yeah, of course. Now turning to a more pervasive topic, I think it not only touches the education sector. I think it touches PFI, and in particular social infrastructure PFI. I'll direct this question at Chris, but I'll ask the panel to come in as well afterwards. But what's the general view about the current state of the UK PPP procurement model? We're waiting for an announcement we're hearing in autumn that we're going to have following the PFI review. Where do you think this sits in the context of the building schools, the priority schools building programme, and should the market be taking confidence that we're finally going to see the outcome of this PFI review?
No loading in that question. Let's start with the good news. I think that the work being undertaken by IUK in looking at the procurement process, in looking at how to streamline it, bring in the cost, simplify the product, and try and come up with greater guidance for the bidders as to what the outcome should be, is all incredibly positive. I mean, they are attempting to rein back some of what, I hate to call it the excesses of the past, haven't been involved in it, but some of maybe the less positive aspects of PFI. I think that's fantastic. I think that the government guarantee initiative is a signal of the importance that's being placed upon infrastructure provision within the coalition's plans going forwards. So I think that also is incredibly positive. I am concerned by the pace of motion towards getting to where we need to be, which is with a firm list of projects, priorities that the government wants to undertake. This is a good step forward. I mean, this says there are however many schools they want to do, here are the first schools they're going to do. I think that's fantastic. The proof of the pudding is how quickly they can get from carrying out this sort of prioritization program to getting boots on the ground. And today, thus far in this government, it's been somewhat unimpressive. So I'm looking forward to them changing that speed of motion and putting the money behind these deals to bring them forward. And I think that that's where they have to show their true colours It's not in planning. It's not in initiatives. It's not in pronouncements. It's in money behind projects coming out to bid, OG notices coming out, and bidders coming out and putting up proposals. And that's when we'll see positive movement. Okay. Dominic?
Not too much to add really, because I mean I agree with Chris's sentiments there. I think the sort of pace of deals coming out in the last 18 months or so has been very frustrating, and there's been a lot of focus and continues to be a lot of focus on the problems in the financing market with banks and bonds, and where's that going to end up, and the lack of funding. But then the response really is, well, we haven't really seen the deals come through to really test that yet. So I think that's always a dynamic that's a little bit a conflict with each other. But I do agree that the sort of general feeling coming out of the government now, although it seems that we're still not going to get a PFI announcement until December at the earliest, which is a little bit frustrating, but it does seem all the ducks are all lining up, or the stars are aligning, or whatever the right analogy would be, that that things are going to speed up once we get the other side of PFI, and we sort of applaud this new school scheme for this sort of procurement timeline, which is very attractive to financiers as well as I'm sure to equity, and so we just do hope that is that is going to be the reality. And I think if it is, you're going to see more interest from institutional investors, because it will sort of get their attention rather than keep on talking to that community about these deals and then they're not really seeing anything. That particularly is difficult for institutional investors who have lots of other things to do rather than perhaps PFI, whether that's
programs big enough to excite institutional investment. $3 billion.
Yeah.
Yeah. I mean, it's not going to. This isn't going to kick off institutional investors. This will be mopped up by the Japanese banks, assuming they're still in business at that point. The EIB will come in for a bit, and if there's any shortfall, Jeffrey will come in with the government guarantee initiative to mop it up. The problem for the institutional investors and the problem for Jeffrey's pension fund idea is that fundamentally the banks are underpricing the alternatives, and until there is sufficient deal flow for the banks to be shown up for being short of money, which we generally are, then we won't see this change over to long-term institutional-based funding.
So we're getting a very small sort of ecosystem of institutional funders, and they all seem to be the same names, are kind of interested and talked about. But IUK is creating a huge amount of interest and demand, but there's no supply. So do we have a supply issue rather than a demand issue, or is it both ends of the equation?
I'd put it the other way around. I understand that there's an awful lot of talk going on. Precious few projects. Those projects that there are being financed quite acceptably, largely by the Germans and the Japanese who are still in the long-term lending market. Until there's sufficient flow of projects for that very thin market to be shown up, then pricing won't start to reflect the true cost of long-term capital, and we won't get the institutions coming in. I think we're seeing positive signs from the institutions. Some of them are setting up teams. We're seeing Hadrian's Wall and other approaches to bringing in institutional money in. But I'm not quite convinced yet that the pricing has achieved a level that makes it truly attractive to these players. Also, government has to change some of the structures around these deals, bringing spends, making them more attractive to fixed-rate investors before it will happen.
I'm not sure I fully agree with Chris there. I think that's more a view that I would have of the large institutional investors, and certainly the government strategy of bringing the big pension funds in. I think that is right, but I think sometimes it's lost a bit. There's a lot of smaller ticket investors out there, the smaller single pension funds, the non-UK institutional investors that have small offices here, that are very interested in smaller transactions and putting in £10 million a ticket and working more on a sort of private placement basis. And we're an institution that's talking to those types of investors, and they have real appetite and are frustrated with the slowness of the pipeline as we've discussed. But I think if there is a real pipeline there, they don't need this sort of whole big world. I think that is for the bigger people, but the smaller institutional investors, I think, will help
provide some of this finance alongside banks, or will provide good competition, which hopefully will be of benefit to the public sector.
I think that we're almost in a catch-22, aren't we? We've almost like got a funding market that suits the pipeline that's there.
Absolutely.
And the question is, going back to Mark's point on the priority schools program, will that change the dynamic? And I think what you're saying, Chris, is actually, I'm not sure it's big enough to change the dynamic. It's certainly not big enough to excite a whole bunch of new institutional funding to come into the market.
I get the point about small players. They're the kind of unknown grey area that might work. I think almost the caveat to or the layer above your point is the government sitting there saying, and by the way, present market, if you fail to provide, I mean, Jeffrey's comment at a conference a couple of days ago was, I can see myself doing these deals 50% EIB, 50% government guarantee as a monoline. So, the message is slightly mixed. The message is, pension funds, please come in and finance the market with us. And the other message is, and by the way, if the price bumps above where the banks can do it at present, or there's too much demand, we government will step in and make good.
So institutional investors are saying, well, why would you spend a lot of time and effort focusing yourself in that direction?
I think they are, and I think the issue for the smaller players, and Jeffrey almost has an answer to this, I think, the problem for the smaller players is, if you look at the book of a pension fund, you've got, let's say you had 100 billion under management. Of that, 90-odd% has to be liquid. There's about 10% which is called their annuities book, which they put in. So you're down for a 100 billion player, and there are only 2 of those in this country. You're down to 10 billion that they can use in infrastructure. Out of that 10 billion, they will only put a limited amount into a single asset class. So for the 2 biggest players, biggest pension fund players out, they are down to having maybe $1 billion and a half to play. Now, it sounds like a lot of money, but when you're trying to build a team to go after this, you're coming up the learning curve on what is quite a complex set of transactions. That's a big ask. Now, for the smaller players, that's even more extreme. So they are in there for maybe 4 or 5, maybe 10 or 20 individual slugs of 10 million in a project. They can't build a team for that. So they need to have some structure by which they come into these things. And Jeffrey started off with the idea of a pension fund platform.
And do you think, given that the guarantee is now out there, if let's say that starts to become apparent on a number of projects, even potentially this schools program, that we're going to get into a stage where one fund gets one bank gets one, credit committee sees them out there. Do you expect, for example, your credit committee to be saying every time you bring an infrastructure project to them, which is effectively underpinned by government, that they're going to say, or government is the sponsor, are they going to say, we need to see a guarantee going forward? So the default option is going to become this guarantee?
I think there are 2 potential answers, and cards on the table. We financed Manchester, which is the only deal to date which has had government funding in it through TIFI, and we got there on that. Credit committees say one of 2 things. They either say, why are we taking the risk where other providers are being guaranteed by government? Question mark 1. So in other words, we should have a guarantee across everything. Brings in a different set of investors. Or they say, government's involvement in this project signifies project or market failure. And at that point they say, well, hang on, if we can't clear this deal in the commercial markets, what is it that's wrong? And that's when the questions start. So it's not straightforward how to use the government guarantee. And to be fair, the government knows it's not straightforward. So, there's an issue there.
But going back to the original question, Mark, in terms of the new PFI model and its applicability, one of the worries that I have is that, and you saw this in part in the Financial Times piece earlier this week, was that when this review was set up following, which effectively was on the back of the criticisms made by the now Chancellor when he was Shadow Chancellor, he set himself a very high hurdle in terms of transparency, in terms of value for money, affordability,
flexibility,
the accounting treatment.
Cheaper, more flexible, more liquid.
Now, to achieve those goals is going to be very, very impressive. And what worries me, that having set that bar, will the new PFI model, which is the default option apparently for the privately financed part of this program, will it pass the politics test?
Yeah.
And I think that is a worry, and I do hope that that it's lined up politically so that can be delivered, because I think that's going to be a very interesting dynamic over the next few months.
And Laura, how are you and Kirk coming after? How are you feeling about the PFI review and its interaction with this program? Presumably, it's uncertainty. You don't want uncertainty.
Yeah, I think there is some degree of uncertainty, but we have got some comfort from the fact that the PFI review won't necessarily delay the initial PFI batches coming out, which are due by the end of the year. And I think if that holds true, then it will give the market some confidence that these PFI batches are coming out and we can all gear up for them. But we're yet to see if that obviously does happen. I think the later PFI batches are likely to have more impact on whatever comes out of the PFI review, and if that signals another delay, then obviously the market will be quite concerned at that point.
Kirk?
Yeah, I mean, I think in terms of what's rumoured to be in there, you know, I think there is precedent being seen in the market. I think Scotland has embraced a number of changes in their sort of standard MPD model that we're anticipating seeing coming out following the review. And so I think, yeah, I mean, I think we go into it fairly pleased that actually PFI has survived the review and is coming out the other end. I mean, obviously we need to see how it looks, but I think again, you know, it's a challenge that the industry needs to pick up and embrace. And I'm sure it probably will cause some initial delays, but I think as an industry, you know, we need to play our part in trying to make it a success, because that's in all our interests.
Yeah, very much so.
And just sort of picking up on some of the earlier funding discussions, I know we've sort of moved on from the topic a little bit. I mean, certainly, unless we see a significant increase in projects coming out, I think, you know, projects ultimately are getting funded and are getting closed at the moment. And it's very much a piecemeal type approach. But I think our funding markets are pretty innovative. When there's a supply of projects there, you know, I sort of live in hope that actually our funding markets will respond to that and come up with ideas and solutions to, you know, that'll meet them.
Yeah, and we'll talk about funding in a couple more minutes, because I think it's a topic that I know the listeners are very interested in. But just talking on the sort of market rumours, and Nick highlighted the FT article earlier this week, and we're all really interested in the in what it said. But in particular, there was, and we've heard discussion of this in the market as well, that the government are looking to ensure that there remains some kind of government equity stake in SPVs delivering these projects, and it's less complex than the LEP-style model, but more around governance and having public sector at the table, understanding the governance and corporate structure issues, and it's almost akin to the sort of discussions that Cabinet Office are having on the sort of pro-mutualisation type approaches. I just wondered and I'll get Nick's view because I know there's a lot of public sector advisors as well as private sector advisors, but I'll ask the developers as well. How do you feel about the public sector? Bit of a difficult question, but how do you feel about the public sector being in the boardroom, and will you be surprised if this is part of the new model, Laura?
I don't think we'll be surprised at all, and I have to say we're particularly open to it because we've seen it have great benefits in terms of some of the LEPs that we've done, but also some of the other deals where actually it does encourage transparency and openness and helps that relationship be successful over the long term, which I think has been one of the difficulties in terms of some of the PFI deals. And so by having a seat at the table for the public sector, you can address some of those partnership issues quite early on and really get the project to be much more successful than without. So absolutely, we're 100% open to that.
Kirk, any thoughts on the sort of public sector in the boardroom?
Similar. I think we wouldn't be at all surprised. I think politically it's probably a necessary move, so I think we are expecting there to be some some form of involvement there. We've not had experience in LEPs, but we do have experience in lift. You know, and again in lift, I think it's been, you know, it's been a positive benefit to the operation of the lift company. You know, as long as it's approached with the right in the right spirit and with the right intent. And so,
Nick,
you know,
yeah, thanks, Kurt. And Nick, let's just unpack the politics a minute. From advising public sector on these things, is it a good thing them having a nominal equity stake and a seat at the board?
It's a good thing. I've seen very different situations. Sometimes it's worked fantastically well. Sometimes it's worked in a very frustrating, undermining type of way. So you've seen very different sides. I think, and this is going back to mine and I guess your time, Chris, when we were back in the Treasury and when we looked at more sharing of equity type models, there was a general sort of feeling that let's keep this simple, let the private sector do what the private sector does and let the public sector do what the public sector does, particularly within a corporate construct. And I have to say, maybe I would just sort of been indoctrinated by that, but that was always my starting point. And if we needed to have other engagement forum around projects, then let's set that up. But let's keep the corporate frameworks clear, simple, straightforward, and it's very clear about where risk-reward lies. Having said that, it seems that through the consultation process that's been run from what we're hearing, that there was quite a lot of appetite generally for those equity involvements to happen, certainly from bidders, and you know, you guys have just said it, and you seem to think that it works well. So if that seems to be the preference, then I think that's what I expect that the Treasury will probably want to do, and let's make it work. I think we should just take the experience of where it's worked well and where it's not worked, and try and ensure that we learn the lessons and get those incorporated into the model.
I think the days of you know, I'm very much a free marketeer and you know, I'm right with you, but I think the days when there was the sort of trust that the private sector could deliver a public sector agenda purely driven by documentation, I think that's been pretty dented by certainly the publicity around PFI. I think some of the reality about PFI was rather less gruesome than some of the publicity that came out of it. So I think the idea of getting the public sector to take an active role in projects delivering, you know, their destiny, I think is a fantastic idea, rather to my surprise.
just one comment on that, as you know, from a creditor perspective, we haven't really done any transactions with the public sector as equity, and you know, I think it's actually fine from a creditor point of view. The only area that I think we just need to think through is the potential conflict when you've got equity on one side and the government paying compensation on the other if the project's going wrong. Thinking through the scenarios, I mean, there is a conflict there, but does that conflict matter? And we haven't delved into this too deeply, but I think it is somewhere where we want to. But on the face of it, it doesn't seem that would be a major issue, but I think it's an area for market consideration.
And there's no greater conflict than we would see in a consortium anyway, and I think, you know, that's why the government just needs to be sensible, and it needs to recognise that there will be certain instances perhaps where a vote is not appropriate, just as a consortium of investors would do as well.
And just picking up another sort of bit of rumour you hear in the market about the PFI review, after the PAC hearing, there was being talk about equity caps on equity returns. Nick, do you see what, you know, just from an overview rather than from a public sector perspective, an overview of the market? How do you think the market's going to react to that? Is it an inevitability given the toxic atmosphere in which we find PFI at the moment?
I don't think it is an inevitability. I don't think it will come naturally to the Treasury. But then you look at Scotland, and actually it seems to be working fine. It seems to be accepted by the contracting community as something that they're comfortable to work within, and the fact that they get up to that cap probably means they're quite chuffed in any event. And it may make the whole package more deliverable from a political perspective. So I wouldn't say inevitable, but it certainly wouldn't surprise me if it's in there. I think probably the biggest hurdle to it is it was possibly invented first in Scotland, which has always been a bit of that drawback from treasury perspective.
But you need to affect the liquidity of the equity markets. Because there's the rubbish. If you price too low, then you're going to be finding insufficient.
I don't think so. I mean, my take on the equity markets at the moment, there is certainly sufficient funding and appetite out there that certainly in the short, medium term, I don't see it as compromising what they're trying to achieve.
Turning to this last big topic we're going to talk about in the webinar is about long-term funding. We've touched on this already, but one for Dominic really. So we've got the programme, and we expect the programme to produce a huge number of opportunities for private sector finance in the many shapes and forms. Do you think that the commercial banking market will be interested and have appetite for these assets? Does it help, for instance, that we now understand that EFA as government are going to be the counterparty to the concession contract rather than a local authority in lots of schools? Are those things positives?
That latter point is definitely a positive. I think that is extremely helpful and sort of embraces sort of most financing parties into the project. So, I mean, I think this will be attractive for a number of financing options because if it does go ahead, the programme on the basis that it's been talked about, as you say, with the government standing behind the payment stream and the procurement process being as quick as it is, lack of finance is not going to be a problem here, despite all the talk of lack of finance in the markets. I think, you know, we do know and hear that the banking market is significantly shrinking for long-term offers, but as Chris already mentioned, Japanese bank, and I'm sure probably your own institution, there will be strong bank appetite, and particularly if these deals are going to be batched in, I understand, kind of 50 to 120 million pound segments. Is
that a sweet spot for, do you think, from a banking market perspective, 50 to 100?
I think it certainly is doable. You know, my understanding is, and obviously not on the banking side, but is that for a club of banks to get together, you know, that is feasible. But then I think from you know, my view of the world, where we're looking at credit enhancing institutional investors, and there are other options out there of doing that, I think that's really attractive to that market as well. You know, the other option is for unenhanced institutional investors coming in, but you keep coming up against this problem, except for a couple of the bigger institutions who want bigger deals, as construction risk is a problem. Now, this obviously, by definition, has construction risk in it, so I think you're going to need some form of enhancement or getting these deals to a higher rating, ideally the kind of A category. And in our experience so far, that's very expensive to do. So I don't see that as being, you know, unenhanced A category attractive way of financing this. But I think there will be plenty of opportunity from structured capital markets investors and from the banks. And so, and perhaps just touching on the point about, we talked about UK government guarantees, I think from what I heard from Geoffrey Spence, there is a real desire to use the UK government guarantees outside of PFI, where there's this financing gap. I think he called it, you know, you can't get the financing like TIFU of old days, and I just don't see that happening here. I think it'd be crazy for the UK government to put money in if what I'm saying is correct, that if the programme is as expected and there'll be financing for it.
Chris, do you agree with that in terms of the UK guarantee being deployed on?
I think that's right. I think that the hope is that the guarantee is enough to keep the developers working on the ground, that the money will be there. So I think that's positive. But I agree in terms of the amount of capacity. I mean, I think it would be an ideal project for your offering if the banks don't undercut you.
Yeah.
And the real question will be how many banks turn up to the party on this. And you're certainly going to get, on today's market, 3 Japanese, 2 Germans, EIB, KfW, and that will be, you know, quite sufficient, I think, to do these deals.
We're in a world where the sort of SOPC 4 world of you know,
it's not going to be called SOPC.
It's not going to be called SOPC now.
SOPC now is a dirty word. It's going to be some new name.
Well, at the moment, as we speak at the moment, we're still in SOPC 4 world, but that's a world of triple B plus at best kind of world and environment. A lot of talk about our customers over in Canada producing great concessions and solutions, and effectively creating a risk transfer model which is more akin to an A- in operation phase, which would certainly suit Dominic and his product and a number of products in there. Do you see there's an opportunity for government during the PFI review to embrace a review of risk transfer to help the funding markets and help institutional investors?
The Canadian model is less about risk transfer. It is more about financial structuring. Now, if you look at the way in which both the Canadians and also the Australians have gone about covering off the long-term debt issue, then they have both said we have a naturally short-term debt market, and we have a long-term product. So either you find ways to shore up the debt market to try and get it to go long, or you change the structure of your deals to make them more attractive to the short. Both the Canadians and the Australians have taken the latter view, and they have brought in mechanisms like support of refinancing to allow the movement from debt into bond. They have brought in capital repayments post-construction to allow the banks to take the construction risk, and the capital markets then come in afterwards. Now, everything that we're seeing from the present coalition government is they're going to take the other view, and they're going to support the long-term market. And in doing that, they can either reduce the risk, I don't think they'll do that, or they can try and enhance and support the debt side, and that's what they're going to do.
And Nick, any thoughts on no chance of reducing the risk dramatically in the new model?
I would agree with that. I mean, I think the point I would make is that what was said from the Treasury earlier this week about the importance of gaining an A-grade status with, and that was to be achieved by higher levels of or lower levels of gearing at 20% or more. I thought that was a pretty clear steer as to how they think they're going to want to structure these deals going forward. The implication of that is that obviously more attractive from a debt perspective, secures the rating, but it's going to be more expensive. And that comes back to the discussion we were having earlier on. I'll throw in another point here. I mean, and this is, I'm banging a boring old drum that I regularly bang, which is that if we're creating a program, and it's not clear quite the balance between conventional and private finance, but if we're in the region of 2 billion plus on a private financing, for me, if you're creating a very highly standardized, structured program of projects, then there's got to be a better way of financing these things in the debt market by doing it project by project by project. And when we did Meeting the Investment Challenge back in, when we were in shorts, back in 2002 or 3, whatever it was, we came up with a model for what was then the Church of England, I can't remember the name of
It was a batch schools
program. Yeah. And a lot of work was done, and there was a proven model that could deliver it. Involved FSA.
Yeah, it was. Indeed.
Guarantee finance.
No, it certainly wasn't that.
Oh dear.
It was called framework funding, and I would like to see the leveraging of a program from a debt perspective to get a better model. You get greater size, you get better portfolio effect, which has got to be attractive from a rating and a debt appetite perspective. And I still would like to see at the Treasury and the Department see if there's not a model that can be developed there. But obviously we don't want to hold the program back.
You may get your wish, because our understanding is that EFA are looking at a program funding solution, perhaps not for these initial ones if they want to get the program moving, but over the longer term, that's one of the things that they are looking at, which I think in some ways we wouldn't welcome, because we see it as one of the advantages of the balance sheet that we have as Balfour Beatty, that we can be more competitive in terms of funding, but obviously for getting this program away for all of the schools, then that could be a positive.
The problem with that is both the link between funders and their relationships, and frankly, good luck. Because at the moment, the only thing that drives us in the banks, and that's whether you're Japanese, German or British, is the relationships that you can then go on to do more with.
But then you're moving back into the
problem. It was the problem back then.
But you go
If you've got a £2 billion programme, then you go back to hopefully opening that up to the capital markets in a bigger way.
That was the idea.
But presumably there's some kind of tap issue in a similar way to the social housing type models could work. But ultimately, it creates a world of world pre-credit crunch of debt being like air conditioning. It doesn't matter as long as it's on, as long as it's there. And relationships, they're important, aren't they? Debt, I mean, I understand from Balfour-Beatty, from what Laura said, that your relationship with your debt providers is an important competitive advantage you have in the process.
Absolutely, and I know that there are a number of other contractors that feel the same.
I just thought I'd get in a nice positive comment about banks.
Thank you.
I think we're coming up to near the end of the webinar now, and I thought what I'd do was wrap up with a question to all of the panellists, a bit of navel gazing, just looking forward and on the programme. And I think a time horizon, say 18 months, is fair and generous. So if we were to reconvene in this room with some air conditioning, hopefully, in 18 months' time, where do you see the Priority Schools Building Programme then? Where will the successes be? I did come across this yesterday. I thought it was quite fun. A pre-mortem. Where do we think the pre-mortem points? Where do you think the challenges will come from for the EFA, Department of Education, has to deal with, and the wider market? So if I start with the contractors, so I'll start with Laura first.
I think in terms of looking at the successes, it's got to be obvious for me. If we crack on with this programme, we will have delivered some of the small schools by 18 months' time, and there will be kids getting a much higher quality of education because they're in buildings that are fit for purpose, that are actually able to meet the needs of both the teachers and the pupils. So that's got to be the real advantage when it comes down to it. I think the other one for me is that they could show that centralised procurement works, and actually the benefits are delivered both in terms of big cost learning lessons much faster, and we see a real improvement in the programme. And I think that would be a real success, because then I'd like to see it rolled out to other sectors. I think in terms of some of the challenges, one of the ones that the EFA are going to face is that they are running this condition survey of all the schools in the country. The outcome of that will be clear, and I suspect it will show that there are a number of more schools that need significant investment quite quickly. I think getting the funding for that and getting approval for those to go ahead will be a challenge, but also the fact that those are likely to contain more refurbishment, and how do we make that value for money?
Yeah. Kirk?
Yeah, I mean, I think, again, very much echoing what Laura's saying. I think for me, it'll be, well, personally, it'll be successful if we've at least got a preferred bidder, if not on the side of the project. I think also, I would hope that I've mentioned it a few times, that the wider industry embraces the opportunity and the challenge positively. I suppose one of the challenges I think perhaps we face and EFA may face, and it sort of links to the funding question we've just been going through. I think as we look at new funding solutions, I think we run a risk of having a concentration of contractors, because actually some of the smaller and medium-sized contractors may not pass the creditworthiness test in terms of getting increased ratings or long-term debt. And so I think one of the challenges that I think investors and the government will face is how can they bring in some of the larger regional contractors into a program, which I think, as Laura sort of mentioned, is probably going to be highly balance sheet based in these difficult times.
Thanks, Dom.
So we're in 18 months, so if I put my most optimistic hat on, that should mean if the EFA can achieve everything they want to achieve, that the first PFI deals should have reached financial close. So that's got to be the hope, and following on from that, I would hope that we would be financing some of those with a wrap bond issue. And I think there's a good point made, but I think that's addressable to get to investment grade, which is kind of where we as an institution are looking, by bonding. I mean, it's much harder to get beyond those low triple Bs, but that would help. So that's where I would hope it would be, and we'll see, I guess.
Yeah. My prediction, I think there will be a good number of projects in procurement. I think the balance will be significantly greater as design and build than privately financed, as we struggle to make the new model work and keep it in touch with the debt markets as things progress over the next 18 months. I think it will be a significantly slower in terms of deals coming to market than had been anticipated. I think there will be a lack of qualified resourcing within the centralised government department to deliver this that is going to cause a significant problem, and I suspect we'll see a number of ministerial announcements telling us how they are going to speed it up by taking lots of new actions to get us there.
Follow that one, Chris.
It's very, very hard to cap Nick on that. I think that funding will turn out not to have been the problem. Yeah. And I think that these deals will get done, and they will get done by RAF bonds, and they will get done by banks. I do wonder about some of the smaller contractors and whether they'll be able to raise the bonding and how quickly they will cap out and in fact find themselves unable to do any more. But I think that's noise around the outside. I think this will be a very successful programme, a very much needed programme. And as I say, the issues are more going to be on the procurement side than they are on the financing. Yeah.
Thanks, Chris, and thanks to the panellists. I think we've really covered some of the key areas in the building schools. Sorry, I keep saying build schools for the future program. Yeah, the legacy of the build schools for the future program, and its progression to priority schools building program. I think it sounds like there's a huge opportunity for the market and to deliver quality schools for where they're needed. As I think the panel has been very clear that it doesn't seem to be funding as the issue here. It seems to be delivering those projects on time and having the central procurement resource to meet some of those very ambitious targets. And I think we'll just have to. I think we've got a month or two to hopefully wait for more announcements from AFA. So we'll be readily reading IJ to find out the news and find out what's going on. So I just like to draw a close to the webinar and say thank you very much to Laura, to Kirk, to Dominic, to Nick, and to Chris as well. And thank you, IJ.
Thank you so much. Thank you, Mark. Thanks to the panel. Thanks to everyone who listened in. On your screen, you can see the rest of the webinars that we're organizing. Please do register for them as well. We didn't quite have time to take question answers because of the lovely debate we had here, but please feel free to send in your questions on the email addresses on your screen, and we'll get back to you. Thank you so much.